If I said kimchi, would the first thing that comes to your mind be DeFi? Probably not, because those two things had nothing to do with each other before a few days ago. Stick around as we dive into the latest DeFi crazes, as well as take a look at how it's affecting the ETH prices, what the Fed's new policy on inflation could mean for your crypto, and more on this week's Exodus Crypto News. Welcome back, everyone, and thanks for joining us for our weekly dive into the highlights of this world we call the cryptoverse, or in the case of this episode, DeFi land. We've all known for a while that DeFi was going to be the next big thing in crypto, bringing traditional finance tools such as interest-bearing accounts to the blockchain, all powered by smart contracts. What we didn't know back then.
Have you heard of DeFi?
I have heard of DeFi, yeah.
That's the big hashtag going around now.
Decentralized finance is pretty big right now. It's one of those cool buzzwords people are throwing around at this point, you know?
Was what it would look like or how it would impact the Ethereum network. The DeFi space changes so rapidly it's hard to keep up, so we still don't have any idea what it will look like in the future. However, what we can see is the impact it's having on the Ethereum network right now, mainly in the rising costs of transaction fees. If you thought the network fees were high a couple of weeks ago, round 2, or is it 3, began this week as ETH transaction fees reached another all-time high on September 1st, when the average fee hit $10.33 on the ETH network, and ETH mining profits doubled in one day as miners raked in over $800,000 in just an hour. This rise in fees, though, has not correlated to the Ethereum price, which seems to have plateaued at $485 a few days ago, before dipping to just above $400 at the time of this recording. The demand for new DeFi products is the fuel behind the ETH fee ascent, and they are coming fast and furious. Hang on, because we're going to try to cover the highlights faster than new DeFi products are introduced. Earlier in the week, we saw the launch on the Uniswap decentralized exchange platform of another new farming scheme called Kimchi, paying massive yields of 120,000 annual percentage yield, with an incredible influx of money in the first 24 hours. However, Twitter user SeanDoctor.eth discovered that the Kimchi contract had an identical infinite minting function as the rug pull scam yearn.finance. This allows the contract owner to mint as many tokens as they please, which in turn would allow them to deposit Kimchi and then drain all the paired assets. Apparently, there's a time lock function on the minted coins, but this has already happened in the past, so as always, do your own research before jumping into an almost too good to be true pool. The flavor of Kimchi did not last long though, and was taken over quickly by a DeFi project called Sushi. The Sushi doesn't run on Uniswap, but it's a Uniswap protocol fork. As a 100% community-owned DEX, Sushi could pose a real threat to the Uniswap platform. Sushi is the main protagonist in the current ETH network congestion and insane gas fees, as people have been moving all their funds from Uniswap into Sushi. Uniswap still remains the DeFi king, however, thanks to yearn.finance. The YETH vault from Yearn launched less than 48 hours ago and already has over 2.3 million ETH locked up, with a value in USD of almost $1 billion. Lots of YFI forks have also been doing well, and by well, I mean going from 0 to hundreds to thousands within days or a couple of weeks. Uniswap has also passed Coinbase in 24-hour trading volume. Not an easy feat to accomplish. We're talking over $1 billion in volume on Uniswap compared to 780 million on Coinbase during the same 24-hour period. Uniswap has also surpassed Maker in the total value locked up in smart contracts. While there can be indeed a ton of money to be made by playing these markets, there's also an extreme amount of risk contained in the complicated multi-step platform lending schemes and their smart contracts. Please do your homework. You'll want to make sure your parachute is strapped on and working before jumping off any cliffs with your capital in hand.
Just because she jumped off the cliff, you're going to jump off the cliff?
For those of you more familiar with futures markets, DeFi now has a hook into those as well. Binance recently launched futures trading and in August saw $195 billion spread across its futures market, with the rise of DeFi being the catalyst in the rising futures contracts for altcoins. What's your take on DeFi? Can you keep up, or is it something that you would like to know more about? Please let us know in the comments below and share your favorite DeFi educational links. The Federal Reserve last week made some big news by announcing a significant change to its inflation policy, which had a previous target of under 2%. Fed Chair Jerome Powell said the central bank's existing target for inflation of 2% should henceforth be an average. In the face of persistently low inflation, the Fed may pursue efforts to push inflation above the target. Changes in monetary policy are typically forged during crises, and there's always a balance between keeping people employed and keeping inflation in check. We're not going to get into an economics lesson here, but this basically means that interest rates for borrowed money could remain low for longer than normal so the economy can recover. This change also represents a significant shift in how the global central bank principle of inflation targeting, widely adopted over the last quarter century, might have outlived its usefulness in a world of lower interest rates. So, what does this mean for your crypto? Let's take a look at the effect from a similar store of value, gold. The money supply is constantly increasing, the US dollar is weakening, and it's cheap to borrow money. Safe haven investors are increasingly looking to gold to maintain their value because bond markets are very unattractive for buyers in these conditions. Gold hit an all-time high at $2,000 this month because of negative interest rates, expansion of government debt, and very few stocks that continue to lead the traditional markets. Why are we making this comparison? Because Bitcoin has been called digital gold, with a fixed supply and a hedge against inflation. Overall, I see this as particularly good for Bitcoin, and what's good for Bitcoin trickles down into what's good for the rest of the cryptoverse. If you would like a wallet to store and exchange your Bitcoin, you can use Exodus. Exodus is a cryptocurrency wallet for your desktop or mobile device, home to more than 100 cryptocurrency wallets and other crypto apps. With Exodus, you can safely store, send, receive, and exchange your crypto assets. Click the link above to start using Exodus today. Now, before we go, we're going to give another high five to Bitcoin as it's become, by market cap, the world's 6th largest currency. That's right, Bitcoin's market cap is now larger than 107 different fiat currencies, including the Russian ruble. Bitcoin's total market cap is around $216 billion, making it about half the size of the Indian rupee and just over 1/10 of the size of the US dollar. At the peak market cap of $330 billion in 2017, Bitcoin would have been the 5th largest world currency. Will it ever be number one? Will it outlast the dollar? Leave your Bitcoin price predictions in the comments below and share your vision of our crypto future. We would love to hear how you see crypto in 10 years. Well, we've come to the end of another episode, and if you like this video, please give it a thumbs up and subscribe to the channel for more crypto content from Exodus. Until next time, hold on.